Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news that is still dominated by high American inflation and low Chinese demand. Everything now depends on American employment levels. As long as they stay high, then the world may get a softer landing than otherwise. But the Chinese situation isn't helping. Today's financial markets are acting like a herd stampede, one that is changing direction. No one seems to want to believe that the 2022 direction so far is the right way. Equity prices are diving, bond yields are jumping, that means bond prices are sinking, and the US dollar is rising fast. Commodity currencies are being devalued, and that is another sharp re-rating lower, the fifth such event in 2022 alone. Since the market high right at the start of 2022, the S&P 500 has fallen more than 20%, so it's now in a bear market for equities. And many now expect the main rate curves to invert soon. Further, commodity prices are almost all falling today. And last week, markets were confident the US Fed will raise its policy rate by 50 basis points at their next meeting on Thursday. Yesterday, that expectation went up to 75 basis points. Today, markets now seem to be expecting a reasonable chance 100 basis points hike is coming. This is fluid, as they say, or others may say panicky. And India's consumer inflation rate actually fell in May from April, down to 7% from 7.8%, which was an 8-year high. A correction like this was anticipated. However, food prices there rose at an 8% rate. And the British economy sank 0.3% in April from March, following a 0.1% contraction in March from February. The April result missed market expectations of a 0.1% expansion. Meanwhile, World Trade and Services is facing a huge threat. At the World Trade Organization summit of 120 ministers in Geneva, India, Indonesia and South Africa are refusing to renew a 2-year rolling moratorium that bans the WTO's 164 member countries from imposing customs duties on e-commerce. The fear is that a round of taxes are coming for global e-commerce. The inflationary impact would be huge. The US Treasury 10-year yield will start today up a remarkable 24 basis points from this time yesterday at 3.41%. And the price of gold is down as sharp as $43 from New York, now at $1,829 an ounce, knocked around by the strong US dollar. But oil prices have little changed from this time yesterday. And the Kiwi dollar will open today sharply lower at just on 62.8 US cents, and 0.75% retreat from this time yesterday. Since the start of June, that's now a 3.9% devaluation. Since the start of the year, it's an 8% devaluation. And the Australian dollar has been hit slightly harder, and we're now a little firmer against them at 90.4 Australian cents. Against the euro, we're down to 60.1 euro cents, and that's a month ago level. That all means our trade-weighted index starts today at just under 70.8 and down another 50 basis points since this time yesterday. But that is only at a level we were last at on May the 19th. So it's really all about the outsized gains by the greenback rather than anything to do with the New Zealand dollar. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.